Noureldeen Al Hammoury, who is the Chief Market Strategist at Equiti Group here in Abu Dhabi. It's good to have you. A South Korean lawmaker has just put a number on the impact to their imports. For example, at least 7 oil tankers carrying crucial supplies unable to pass through the strait. As we look at Asian markets, which are actually bouncing back after a number of particularly punishing sessions, can you just explain how vulnerable these economies are in particular?
I mean, of course, but not just about as you said at the beginning, it's 1/5 of the entire planet. Oil, roughly about 20 million barrels, normally flows through this 21-mile wide choke point. That's also the same as shutting down all the U.S. oil production, plus Saudi Arabia, plus Iraq's combined. As we saw, oil already is above $80, and the possibility of $100 is basically on the table. But at the same time, it's not a black and white. It all depends basically on multiple scenarios, how long this war is going to last. At least for now, we're in week 1, and most likely we're going to stay between the $10 to $15 gap up. We saw the gas prices also is up, and most likely we're going to keep on going if this continues. Now, if we pass that 100, let's say, or 1 month, we'll be talking about 100 to 120. And we'll be talking about recession risks again, sharply rising in import-heavy Asia. That is the most one. And don't forget also, food price will be on the table.
Let's concentrate on these energy supplies. I think the food prices story is also a key one, and we'll talk about that. But these energy supplies, absolutely key here. And you've just mentioned Qatar. We know they are facing a new barrage of missile strikes, literally as we speak. In the past hour, their interceptions have taken out a number of missile strikes. They'd already halted their LNG production, which counts for roughly 20% of global LNG exports. How long will it take before that impact is felt in global energy markets?
I would say if we want to see something like the 1970 style energy shock, we will have to basically, we're talking about at least 2 to 3 months. That's what we call the tail risk, which means if that happened, you're talking about $140 and to $200 oil is basically possible. Global GDP will be hit between 1 to 2%. And also there's another thing which might, if it's correct to call it, the hidden bomb, almost nobody's talking about yet, which is basically, it's not just oil. Almost 1/3 of the world traded nitrogen fertilizers also sails through the Strait of Hormuz. You're talking about that's Qatar, Saudi Arabia, UAE, and Iran exports. So a longer shutdown, we're talking about fertilizer prices soaring. Spring planting cost also would explode. That's for India, that's for Brazil, and even the U.S. farmers too. We're talking about higher food prices worldwide by the summer, and this would turn from an energy crisis into a food and energy double hit. So I think we don't want this war to continue over 2 months. That would be the maximum, I would say.
Noureldeen Al Hammoury, good to have you on this morning. Your perspective incredibly important to us as we continue to cover the war on Iran and its regional and global impact. Thank you. The US has